Whenever the stock market declines, we see big scary headlines such as this. But are all stock market falls bad? And if you are an investor or trader and you read news such as this, it can really play with your emotions and affect your investing and trading. So in this video, we'll be taking a look at whether are all stock market falls bad. And by the end of the video, you'll get an answer to that question, and you also know the difference between a normal stock market correction versus a stock market crash. But before we begin, if you are new to this channel, my name is Linus, and in this channel I share all things related to the stock market, so both investing and trading. If you want more videos such as this, make sure you subscribe to my channel because each week I release new videos about investing, trading, and the stock market. Alright, so let's begin. If we are to answer the questions, are all stock market falls bad? We first need to know the difference between a normal stock market correction versus a stock market crash. So if we take a look over here, a stock market correction is defined when the stock market declines less than 20%. So if a stock market declines by 5%, 10%, 15%, we define this as a stock market correction. But if prices of the stock market declines more than 20%, we then define that as a stock market crash. And on top of the percentage difference in terms of the decline in prices, the stock market crash is also different from a stock market correction in the way that during a stock market crash, prices usually decline very rapidly. So that's the difference between a normal stock market correction versus a stock market crash. And the reason why it's important to differentiate between a normal stock market correction versus a stock market crash is because this allows us to have a greater perspective whenever the stock market declines. Because sometimes when the stock market declines by 5%, the news and people on social media tend to sensationalize the headlines. So they will call a stock market correction as a stock market crash. So by understanding the difference between a normal stock market correction versus a stock market crash, you as an investor or trader will be less affected by the news headlines or by social media, and this will help you improve your mental stability and health as an investor or trader. So that's the first thing. The next thing we'll take a look at is a stock market falls bad. As an investor or trader, you need to understand this fact that stock market falls and declines are to be expected. If we take a look at this data over here, this shows the average frequency that the stock market, or in this case the S&P 500, declines. So for a 5% or more decline, the average frequency that it happens is about 3 times per year. For 10% or more, it happens about once per year, 15% or more about once every 3.5 years, and 20% or more about once every 6 years. So as we have seen just now, anything below 20% is defined as a stock market correction, and anything above 20% is defined as a stock market crash. So if you take a look at the stock market correction part, so anywhere from negative 5% or more, so from this row all the way to this row over here, you'll see that stock market corrections or stock market falls and declines are a normal part of the investment cycle. So even in a bull market and an uptrend, although prices generally increase in price, there are also instances where prices will decline, and this is normal. So the next question is, why are declines a normal part of a bull market or an uptrend? To answer that question, we first need to know some fundamentals. So this is basic econs or econs 101. So whenever prices fall, it means that there's more selling compared to buying. So in other words, there's more supply compared to demand. So when supply outweighs demand, prices will fall. And this is also true in the stock market. Stock prices will fall when there's more selling pressure compared to buying pressure. So when more investors and traders are selling compared to investors and traders who are buying, the price of that stock will fall. And I will later explain why investors and traders sell in the stock market. But for now, we just need to know the difference between a normal stock market correction versus a stock market crash. Because these two terms are very different, and how you react to these two different situations will also differ. So these are the two main reasons why there are selling pressure in the stock market and why stock prices will decline even in an uptrend or a bull market. To illustrate this point, let's go over to a stock chart to see an example. So if we take a look at this stock chart, this is a stock chart for Tesla. So back around late September and early October, Tesla stock took off and it rose up quite substantially over here. But if we zoom in over here, Tesla stock start to decline. And this decline over here is normal. Let me explain why. So as Tesla stock rise up in price over here, there are definitely investors and traders who have already made some profits on Tesla stock. So what do you think the investors and traders will do at this point over here after they have made quite a substantial amount of profits on Tesla stock? So there will definitely be some investors and traders who start to take profit at this point and sell some of their Tesla stock. So as these investors and traders sell their Tesla stock, this will create selling pressure on Tesla stock. And at this point, the selling pressure outweighs the buying pressure. And because selling pressure outweighs buying pressure, as we have seen earlier on, we know that the stock price will decline. And this is what happened to Tesla stock at this point over here, where it declines. But take note, not all the investors and traders are selling at this point over here. At this point over here, at its all-time high, there will be some investors and traders who bought into the stock, because they have seen how fast Tesla stock rise up in price and also rise up quite substantially. So they also want part of the action. So they bought at this point in time, but they didn't know that Tesla stock was going to decline over here. So Tesla stock declined over here, and it managed to find support and it go back up. So at this point over here, the investors and traders who bought at this point might look to want to cut their losses over here. Why? Because after they bought, prices decline, so they tell themselves, if Tesla stock price rise back up and close to their entry price level, they will look to sell and break even or cut their losses short. So as Tesla stock rise back up and move close to their entry point, they decide to cut their losses over here. So at this point, there will be more selling pressure relative to buying pressure, and this will cause stock prices to fall over here. So this is the reasoning behind why stock prices can fall even if the stock is on an uptrend or in a bull market. So to summarize, stock market falls and stock market declines are part and parcel of a normal bull market and an uptrend. It is normal because even in an uptrend and in a bull market, there will be some investors and traders who want to take their profits and cut their losses. And because these investors and traders do what they do, this will cause prices to fall. Therefore, stock market falls and declines are very normal. So hopefully by understanding this point, you are less susceptible to news headlines and social media posts, especially when the stock market declines and falls. If you are able to control your emotions and not let this affect your trading and investing, you'll see that your trading and investing will definitely improve over time. So hopefully you have enjoyed and learned something from this video. If you did, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you want more weekly stock ideas and tips, make sure you join my Facebook and Telegram groups. I included the links to the groups in the description below. I'll see you in the other videos to your financial success.